In this video, I am going to break down the full daily cycle step by step. You will learn exactly how to use the Asian high, midline, and low, how to combine that with yesterday's high and low, and how to read mitigation so you instantly know where to stay out, sell, or buy. By the end of this video, you will understand the entire cycle clearly enough to trade it with confidence. I will walk you through everything using real examples, so focus up, and if you get stuck anywhere, drop your question in the comment. We all know when looking for lead cycles, the best time frame to analyze is 5-minute time frame. So before the moves happen, we will identify a valid point of interest before the sessions open. As you can see here, we got a bullish trend, high, higher low, higher high, and then suddenly lower low, and breaking again as you can see, not this high, breaking this high. As you can see, we can consider this one, as you can see, a trend line liquidity. Every zone is set, and we can pick the extreme one. This is the only point of interest that has, let's say, an imbalance. If you look carefully, you can see there is an imbalance. Now that we know that price will eventually come back here and mitigate, what we also can expect is, as you can see, after price broke a higher, price went down structurally. As you can see, we have untapped Asian low and Asian high. What we also want to identify is the midline of Asian box. As you can see, now let's forward the price. In this case, the London session is not open yet. We don't know if price will go up or down. What we will do is react on it, and I will show you how you can always react. We can see price went up, mitigated a point of interest here, but we cannot trust it yet. Let's wait. Now, as you can see, price took out Asian low, but we cannot say actually this is the yesterday high, or we can consider this one as smart money trap. But to keep it simple, let's not count that. Let's see. What we will do here is use Asian high, midline, and low as a support and resistance. What do I mean by that? As you can see, price went down, took Asian low. There is possibility that price touch the midline, then go down to mitigate this point of interest. And there is another scenario that price will go higher, take out Asian high, mitigate something around here, or take out the yesterday high. So what should we do? We will wait. First thing we will wait is if this Asian midline will hold. If it holds, then we will go to 1 minute to look for change of character. As you can see, price seems to hold. We will go to 1 minute, see if we can get an entry. If you follow price, we can see high, higher low, higher high, then broke structure. What we can do here, go to 3 minutes. 3 minutes is not showing a good point of interest, but we can set limit order here, stop loss around here. Always watch out the wicks. Sometimes price will do something like this, then go down. We will target this point of interest. Now that it is working, you cannot trust it. Maybe let's go back to 5 minutes. Maybe it will take this low, then go back up to take Asian high. What you should do is risk management. Always break even when price moves to your direction like this. You can re-entry. As you can see, we have another break of structure. This is the only obvious point of interest. We can go to 3 minutes to check 3 minutes a little bit bigger. Now, I would recommend to only take one trade, but since we are break even, we can risk here. Keep the stop loss a little buffer. Dark is there. Let's see what happens. Now, if you see something like this, it is taking a lot of time, just cancel it. No need to hold it. You can take partials if you like, or hold it something like this. Keep in mind, the only reason we took this trade is obviously it retested the Asian box midline, as you can see here. Then we got a change of character. Price looks like it mitigated imbalance here, as you can see. You can even consider this one as point of interest. It is a matter of stacking confluences. Price went down, mitigated nothing over here, as you can see. Not even the, maybe it mitigated this fake SMT. The only reason that I would call this one a fake SMT is because it has a liquidity, as you can see, and it has another point of interest, the extreme one, as you can see. The move started from here, caused this high to be broken, as you can see. That's why this one becomes a smart money trap. It's just a simple rules. Here, what you can do that I wouldn't recommend is take a risk entry and take profit. You can either set it at Asian midline, you can even set it at the Asian low, but we know Asian high will be taken. We can set it up until here. This is a risk entry. If in case price fail, price took out this point of interest, then we should look to left. What will price do? Price will head down, maybe mitigate something around here or take out this Asian low. We don't know, losses can happen. Let's continue. Now the risk entry is activated. We can go to 1 minute to look for a confirmed entry. Price here seems straightforward, as you can see. Lower low, mitigation, then a lower high, then higher low. Price could not go lower. Let's see what happens. Now we have a clean move vector candles breaking this recent high and this high, as you can see. To choose the correct point of interest with stop loss, check the 3 minute. As you can see on 3 minute, we have nice one candle here that caused a move. We can set limit order here. Always give some buffer for the stop loss because you don't know what will happen. Take profit, same thing. We will target the high. We can cancel this one. As you can see, price failed to trigger us. While halting this one, you can check for the next cycle. The first cycle was price mitigated Asian midline, retested it, as you can see. First broke it, then retested it. We used this one as resistance, then we got the trade, as you can see. Plus we had the point of interest here that price mitigated. Price went down, took liquidity here, took Asian low, took liquidity, mitigated an extreme point of interest that caused the break of this high, as you can see. Now price will take out the Asian high. There is two scenarios will happen with this high. The first scenario is we have here a point of interest, because as you can see, price went up, higher low, then failed to break, broke lower, as you can see, and this is the extreme. That is the first scenario. The second scenario is this is a liquidity of yesterday is high. Price will take this liquidity. There's two things we can expect after taking the yesterday's high. Is price doing this and then keep going up, or price will take it, go down, give you a change of character or something to go lower, maybe target something around here, mitigate something around here. Simple. Now let's see what will happen. Obviously we cannot take a risk entry on here because if I zoom out, you will see price was bullish, higher high, higher low, higher high, as you can see. It is very obvious. So if this one holds as a point of interest, we need a confirmation on lower time frame. Now price mitigated. Let's go to 1 minute. The only low I think price will break is this low. By the way, we are at New York Open. So this is what happened. High, higher, low, failed to break higher, now breaking lower. Let's go to 3 minutes. This point of interest or supply looks better than on 1 minute. Let's cover up until this high. This time what we will aim is, as you can see on 5 minutes, there is two things you should think of. That the move started from here, correct? Then broke the Asian high, right? But it is failing to break this high, which means two things. Price will come down, mitigate this point of interest to go higher, or price will break this point of interest. Now for me, I will target around here, something like this, to avoid the price holds and to avoid in case the price holds, so I don't end up in break even. As you can see, The limit order was almost hit. What we can do in this case, give it another chance or let it go. We can follow the price like this because we know price wants to go down. This is the last cycle, as you can see, target same. Price is doing again. We have another point of interest. Price is doing the same thing again. Let's see on third try, will it liquidate us or trigger us in? We are in, as you can see. Now it is London close, as you can see. It is 10 a.m. We will go to the next day. It is very simple. This is how you follow the daily cycle of lit. Let me recap this. We have here higher high, higher high. As you can see, the move starts from here, higher high. You can see higher high here, higher low, higher high. Then price broke down, broke this demand. Then price went up again. The move started from this point of interest on 5 minutes, went higher. Price trickled down, as you can see. Price went down, broke the Asian midline, took out Asian liquidity low. Price went up again, mitigated Asian midline as a resistance while mitigating a point of interest around here. Then we got a change of character to confirm that price was to go down. Price went down, mitigated the demand. Price went up again, failed to break this high. It was not a valid supply because it has not broken the valid low. But as you can see, price held. It did not break. So on 1 minute, we confirmed that price wanted to go lower. So price went lower. I was expecting this demand might hold, so price might go up again, but actually this demand failed and price changed its direction, as you can see. That's why with lit cycles you can marry a direction. So focus with me on this. Is Monday 17 November. We will do the same thing. Let's mark the high of Asian high and low, so we can mark the midline like this. As you can see, the price is doing same thing again. Let's go to 5 minutes. Price did the same thing again. This time, no point of interest mitigated. Price went to Asian low. Price then at Frankfurt open mitigated again Asian high, stall a bit or consolidate over midline of Asian high, then went down. Now we want to see where the price is going. I am expecting price will go up until here because this is Asian low, as you can see. There's no way, as if we follow the price, we have lower low, lower high, and lower low. Price mitigated the midline of Asian box. Now we can look for a sell. We are not expecting price to go higher, simply because it failed to go higher over here. As you can see, price went down, confirming that price wants to go. This is a Victor candles, as you can see. Asian low and Asian box also inside Asian range. You will see a Victor candles. We will risk only on sales. We have here a couple of point of interest. After price went down, we have here, as you can see, maybe this point of interest will hold. We can also go to 3 minutes to pick better point of interest, something like this. Target around here. Actually, what if, as you can see, the move started from here? What if this point of interest held? Yes, there is a potential or a high chance that this point of interest might hold. We should not be greedy and target this point of interest. Instead of expecting price to break, price can change its mind. We only react on it. 5 hour is still good. As you can see, this one is a loss. We will move on. We can try again. Let's go to 3 minutes to see. Yes. Let's pick this point of interest. First of all, if we are being realistic, price went down, then lower high, lower low. Price will, the theory is price mitigates, then goes down, but price little bit wicked at the point of interest, but it still broke structure again. So what are the chances we gonna get wicked again? We don't know. We will react to the market. We still know that price wants to go down. Let's see what happens. We will break even around somewhere, maybe here or here. Let's say here. Now we can break even. Let's recap. As you can see, what we did is use Asian high and midline and low. There was something, there was possibility of something like this. In case we did not mitigate Asian midline, there is always possibility like this. Let's say price broke Asian low, then price comes back, retest Asian low, give us a change of character to go lower to mitigate a point of interest somewhere. You always need to find point of interest. Same thing here. If price takes Asian high, we can expect that price, if price is going to continue up, we can expect price comes back to use Asian high as support, something like this, then give us a change of character, relative break of structures to go higher to mitigate point of interest. Then if this point of interest holds, we will see something like this, price wanting to go lower. Everything will look like with the strong move, Victor candles. Price will look like it is rushing, not like, something like this. See how price acting here? It is very choppy price, but when we get to point of interest, or for example the Asian midline retest, then price rushes down to mitigate a certain point of interest. After mitigation a certain point of interest, price rushes up again to mitigate another point of interest, then price rushes down again. Price is always creating Victor candles, but to simplify it, you need to follow it structurally like this. Anyways, after mitigating this point of interest, what we are expecting is simple: two scenarios, right? First, we know price can do like this, give us something like this, maybe entry on first relative break of structure, or second relative break of structure, or price can go lower. After going lower, taking this all low, two scenarios will happen. Price will go back up, give you relative break of structures to go higher, or price retest, then give you relative break of structure to go lower. Now same thing can happen. As you know, price goes lower, gives you relative break of structure like this, then takes you up, go higher like this. It's it's a game of probability. It's the, this is what we call numbers game. If we consider it like this, as you can see, this trade was 7R. In case this trade fails, you only lose 1R. Let's say you lost 1R here, then you won 7R. Now you are up 6Rs. Let's see what happens. This is strange. Let's go back to the 5 minute zone. Let's see if we can see another point of interest. Maybe cover the whole zone like this. It's not really liquidity sweep because it did not induce this low. What we can do here, take this one as our point of interest. We can go to 1 minute, and we have here a couple of break of structures, relative break of structures, as you can see. Let's see what we can target as take profit. We know if we zoom out, there is possibility that the price takes this high. Let's see what happens. Price did not recross. It doesn't matter. We missed this one. Let's go for the next day. And here we will do the same thing again. After identifying the Asian midline, as you can see, price went up. Now we don't know what will price do. It's better, as you can see, if this point of interest is mitigated, is better. I know you are focusing on the price retesting many times or Asian midline, but what we need is something like this. Let's say price goes down, takes out Asian low, comes back up, mitigate midline Asian, gives us something like this, then goes down, right? But price built liquidity around the Asian midline. So why would you wait for, let's say, why would you wait for a something like this? We are still in when there is trend line liquidity, price will take both sides like this, like this. It's not the same as Asian high over here, as you can see. What you can see here is no point of interest mitigated here. Maybe this one was mitigated. What you can also see is Asian midline was retested, then broke down. But first, price went took the Asian low, then price went high, mitigated this point of interest, retested midline, and we have liquidity of here that we can ignore. It does not, it's not important. But as you can see, the move, look at the move. This is like an inducement high to go lower. Focus on this. Price went lower, took Asian low. Price went higher with vector candles. This is an inducement, mitigated point of interest over here. Then price gave us, as you can see, relative break of structures. Let's continue. In this case, price induced high, price induced high, price built liquidity of here, induced high, where we are expecting price to go lower. Let's see what happens. But I don't like retesting of Asian midline. Let's focus on the scenario. Price is taking high, right? Then we want price to come back, retest Asian high, give us relative break of structures to go higher, or price mitigates this point of interest, go lower, maybe Asian mid low somewhere here, but we don't have a point of interest here. This one is mitigated, it seems. Let's see. Yes, this one is mitigated. So we know what will happen now if we do something like this. You can see a liquidity. This becomes liquidity. After price moves up, comes back, mitigate the point of interest. Now this can become equal lows because this point of interest is mitigated, and it has done its purpose to go higher, and price went higher already. Then I'm expecting at least maybe mitigate this point of interest, but we know what will happen here too. Price will take this point of interest simply because it is in Asian low, not in the middle, Asian low. So let's see what happens. As you can see, price took Asian high. Price, it seems price is remitigating or respecting this point of interest. Let's go to 1 minute to confirm. Yep, price is creating vector candles. Maybe we can enter somewhere around here. Target is Asian low. Okay, we can cancel it now because price showing no intent to mitigate this one, and price looks like this demand might hold. We don't know. So now we can cancel and see what happens. Okay, we can see uh, Asian low was taken. Yesterday's low is also taken. Maybe this one too. Now there is two scenarios we can expect. Price goes lower, retest, give us a relative break of structure to go lower, or price took liquidity, now it needs to go up, so it will give us a relative break of structure to go higher. We can go to 1 minute and see what happens. Maybe this high. we can see that this high was broken. Let's go to 3 minutes. Maybe in this case 3 minutes is a bit let's say extreme, as a bit aggressive. Take profit the high. First let's reanalyze. Don't be confused, only focus now. Now we have Asian low taken and yesterday's low taken. Price might go back and take this one. It is your choice if you want to risk. We have here point of interest, maybe something like this. And we have this one, I almost forgot. We can consider this one equal highs to price to mitigate higher. Makes sense, right? Yeah, it does make sense, but let's be reactive. This is a wishful thinking that price will go higher. What is in front of us is simply price took out Asian low, price took out yesterday's high. Now this one we can consider it as break of structure too. So price goes up to mitigate this supply. Simple, right? Do not complicate things. Just below it like this. 9R is still good. Let's see what happens. We are active. We have another break of structure. Let's see. Can we get another entry? We can risk it because we had lots of wins. If this price went lower, we will lose 2R. 6R looks good. Now let's go to 5 minutes. We need at least price to go up until here. Then I will break even. Okay, now we can break even both trades. Now we are risk free. By the way, we could have re-entered somewhere around here too. Let's go to 3 minutes, maybe 1 minute too. You see, if we refine it like this, we could have re-entered here. It doesn't matter. We already risking. We have already entered twice. Let's continue. Take profit hit and price seems to be halting. Let's just see if price holds here or goes up. Mitigate this point of interest. You see, price held. Maybe look at this point of interest. This is just a week. You can say liquidity is weak. It doesn't matter, but it looks like the point of interest. This supply held and price went down. Simply because if we zoom out, The move started from here, broke Asian low, took liquidity, yes, and broke yesterday high, took liquidity, yes, but this is still a break of structures. So price went up, mitigated this point of interest, wicked at it, took liquidity, some kind of liquidity, then price went down, took out uh, this, let's say this old low. So that's it. I hope this one was very simple. Trading the full lead cycle like this looks cool, but let me be honest with you, it's hard. It demands emotional control, patience, and constant analysis. Most traders burn out because they are trying to catch every single move on the chart. Humans aren't built for that. We are emotional. We want control. And this style of trading punishes anyone who forces it. That's why I don't trade every move anymore. I only take A plus setups and I use mechanical lead system that removes 90% of the stress and second guessing. It's the only reason I can trade effortlessly day after day without blowing up. Watch this video a couple of times, apply it, you will see exactly what I mean. And if you want the same mechanical lead system I trade, the one that gives you structure, clarity, and long term consistency, DM me on Telegram. The link is in the description.